The thing about startup business loans is that you are looking for money. If you are a startup owner, you're looking for money, right? You need to make payroll. You need to actually finance an expansion. You need to take care of your operations and a lot of things. But you don't want to actually get a startup business loan that has crazy fees, that has a complicated, I would say, complicated conditions. You don't want that. So it's very important to have the proper steps when it comes to comparing startup business loans for bad credit, especially for bad credit, because this is where some lenders will actually take advantage of your situation. Okay. So the very first thing I want you to do here is to actually find out the credit requirements. So when we talk about credit requirements, we're speaking about not only your credit score, because credit score is just one part of the credit requirements. It could also be your credit reports, because some lenders they'll let you know. We have restrictions when it comes to the regulatory items in a borrower's in an applicant's credit reports, right? So things like bankruptcy, things like collections, things like tax liens. Those could be deal breakers. So it's very important to actually familiarize yourself with their credit requirements, and so that will actually help you a lot when it comes to boosting your chances of approval. Okay. By the way, welcome back to the show. It's really a pleasure to have you here. So in today's conversation, I'm just explaining to you how to actually compare and contrast startup business loans for bad credit or fair credit for that matter, so you are sure you are making the right choice. Okay. And one thing I need to say here is that you want to be wary of lenders who promise you loans with no credit checks, because those may be predatory lenders who will charge you sky high rates and fees. Okay. Now, because when you have a startup, you have actually a conundrum. You have a dilemma. You need fast access to cash. Okay. At the same time, you want to have access to that cash real fast, but at a very decent conditions. So this is the sort of equation you need to solve. Okay. This is why it's very important to find out the credit requirements. And once you find out, what I want you to do, I want you to list everything in Excel spreadsheet and compare side by side, so you know which one is better for you, which lender is better for you. The second thing I want you to do here is that you need to research the other requirements too. So credit requirements are not the only things that you need to research. Okay. And I just want to quickly remind you of today's topic. We are having a conversation about how to compare and contrast startup business loans for bad credit or fair credit for that matter. Because the whole thing is, the bottom line here is that you want to get the best business loan for your industry, for your company, for your startup, for your situation overall, for your financials also. Okay. And sometimes the thing here is that when we talk about the other requirements, some lenders may want to see a certain amount of business revenue or a personal income before approving you for a startup business loan. Okay. So you really need to understand here that lenders are trying to cover their asses by asking you those, by actually imposing those restrictions. Okay. Requirements may be higher. So if you are a bad credit borrower, you might actually face I would say a higher restrictions, because again, lenders are just trying to reduce the risk that you will default on the loan. So my question to you is, do you currently produce personal income, or is your startup generating some revenue? Because when we talk about startup, I mean, the theoretical concept of startup is actually a business that has been in operation for less than 12 months. So technically, you could be generating revenue if you have been in business for, let's say, 10 months or 11 months or 9 months. Okay. So what is your situation? Are you generating business revenue? Or do you have a personal income, like stable personal income on the side, so that you are able to actually parlay your positive income situation on the personal side into a successful startup business loan application? Those are important considerations. Okay. And so besides the credit score, the credit reports, the revenue, it's really important to also think about the industry you're in. The lender wants to make sure you are not in some sort of how do I say this? dodgy. I wouldn't say dodgy industry. Dodgy would not be the proper word, but sensitive industry. Some industries are going through ups and downs, and lenders again are they trying to cover their asses. The third thing I want you to do here is to see how high the interest rates can go. This goes back to the conversations I started earlier when I said, listen, you want to be wary of lenders that promise loans with no credit checks, for example, or you want to actually understand all the conditions, all the terms and conditions, okay? Because the last thing you want, once again, is to sign up for a loan, a startup business loan, where they are charging you like crazy high interest rates and fees. So son, daughter, if you are listening to me right now and you want to understand, you need to actually simulate. You want to simulate how high the interest rates can go. And some lenders have on their website loan simulators, okay? And if you don't have it on their website, you want to contact them and you want to ask them you want to ask them blank in a blank fashion, how high does your interest rate go, or how high can your interest rate go? I mean, it's an honest question. And if a lender is trying to play games, they're not answering you directly. They're just trying to, dance around the topic. They're dodgy. Something is fishy here, okay? Because a decent lender, a respectable lender, will answer that question. They'll say, listen, our APR goes from 5.99% to 35.99%. Okay, so at least you have the delta. You have the low limit, and you have the high limit. So this will help you actually say, okay, am I comfortable getting to this loan transaction? At least at least you know. So with bad credit, you are likely get assigned higher rates on a startup business loan. So please check out the lender's range, the APR range, to make sure the rates don't climb into unaffordable territory. Because yes, you do have bad credit, but you're still a human being. You're still a business owner. If the rates are too high, if the rates are I don't know how to say it. Like if it's the territory is really unaffordable, let's say you have a 100% interest rate. Who's going to repay that loan? That's just crazy. I mean, you're going to have to derive a lot of revenue, a lot of cash flows to actually pay those interests. So pay attention to that part. The fourth thing I want you to do here is to compare repayment terms and schedule. Okay. And this is another important ingredient in the whole step-by-step when it comes to comparing and contrasting startup business loans for bad credit or fair credit for that matter. Okay. So let me again remind you of today's topic. We're trying to contextualize the conversation here. So I'm giving you tips, tricks, and hacks to help you compare, to help you evaluate startup business loans for bad credit. So when we talk about comparing repayment terms and schedule, we're talking about the repayment window, the payment window. So is the lender giving you 3 years, 5 years? Some lenders are so scared about startups, they'll just give the startup 1 year to repay the business loan. So what is your window? What is the window you are working within? You got to know those things, okay? And when we talk about the schedule is also important. The schedule will play an important role when it comes to your liquidity strategy. And some lenders, they impose frequency of repayments, schedules of repayments that could be disruptive to startups. I would say cash inflows and cash outflows. Okay, let me give you an example. You have some lenders who want you to pay them to repay the loan every day. Every day they're taking money out of your account. Some lenders are more lenient with like in quotes, they are asking you like to pay them every week. So not all lenders will want you, like some lenders will want you to pay them every fortnight. So it's not really common. Don't think for a second that all lenders will be comfortable with you paying them every month. No. Some lenders are just like, listen, we want to get our cash as soon as possible. So it's important that you need to find out how long you have to pay back the loan and whether you have to make payments on a daily, weekly, fortnightly, monthly, or quarterly basis. It really depends. Okay, everything depends on the agreement you have with the lender. But again, the repayment terms and the schedule will have an important role. Will play an important role in your liquidity strategy. So be very careful there. The next thing I want you to really pay attention to is to actually watch out for the loan fees. So see, I talked earlier about how high the interest rates can go, but the loan fees, when we talk about loan fees, we're talking about fees that actually are spread across the repayment window. See, a lot of startup owners, when you talk about loan fees, they just think you are speaking about closing fees or administrative fees. Those are what we call fees before you get the loan, right? Before you get the loan proceeds. So this is what we call the pre-loan proceeds fees. But there are fees that the lender may charge you once you get the loan. And there are fees that lenders may charge you once you actually repay the loan, okay? Let me give you an example. There is something called prepayment penalty. So if you have a loan, if you have a startup business loan, and you happen to, let's say, pay the loan in advance or too early, the lender is losing money, right? They're losing money, so they may charge you a prepayment penalty, or as you're repaying the loan, sometimes you might miss a payment, and some lenders, it's just like they're just waiting for this one opportunity to kind of like scare the hell out of you by charging you crazy high interest rates. So if they're charging you interest rates that are in unaffordable territory, you can't really afford it. So you have to be very careful there. And also, when we talk about there are other loan fees. For example, there are some lenders, even though they're rarer these days, they might charge you something when you are about to pay the loan, like repay the loan in full. Okay, again, they're just trying to milk every fee or every revenue out of you. They're just crazy. So, extra fees can add to your cost of borrowing. So make sure there are not any surprise charges hidden in the fine prints. I mean, I know a lot of folks are not interested in reading the fine prints. It is as boring as legal lingo can get. But hey, it's very important to have someone read that lingo for you if you are getting a large loan amounts. Okay. Another thing I want you to do here is that you have to really pay attention to customer service, the lender's customer service, because usually if you are a startup owner right now and boss, if you want to get a business loan, you're just looking at what our team calls the front office. So you're paying attention to getting the loan because you are so excited by the loan prospects and what you could do with the loan to expand your business, to hire people, to actually develop new products and services and whatnot. Okay, that's human, that's normal, that's decent. But you got to think about the back office. So the front office is the front office has underwriters, right? The loan reps, those are folks you talk to, and they'll help you get the cash. But you got to think about the back office, the customer service, okay, the loan servicing team. And the thing is, when we talk about customer service options, you got to think about ways you can reach the lender. If you have a problem, if you have a question, ways you can reach them, but those ways must be reasonable. Like, does the lender allow you to contact the organization via phone or via chat, okay, via live chat, for example, via social media, or do you have to just write a regular snail mail? This is kind of crazy, but yeah, there are lenders nowadays who always tell you, please send us an email to blah blah blah, PO Box 12345, any state, any city, any state. So be very careful there, okay? So ideally, you will find a lender that offers responsive customer support and a variety of contact options such as phone, email, or instant web chat. The more, the better, okay? Because the bottom line is you want to have a lender that cares about your loan that cares about you as a borrower, as they do care about the loan, because to them a loan represents a source of revenue if you pay the interest. At the same time, they have to take care of you because you are quote unquote the producer of that revenue. If you don't make payments, if you default on your payments, they're losing revenue. Even worse, they're getting a loss. So that lender must really pamper you like crazy. This is really important. And another thing I need to say here before we close, customer service is really important in terms of responsiveness. Okay, the time it takes for them to get back to you is really important. You want to actually stay away from those lenders that actually, and see, everything I'm telling you, you can get this through the reviews. And I'll speak about the reviews later on, but those are things you can actually find out by testing the waters, by actually calling them and seeing how long it takes them to actually reply to you. So this will give you an idea of how responsive they are. The last thing I want you to do here is to read customer reviews. And so the thing is that when we talk about reading customer reviews, you have 2 or 3 reviews out there, review websites out there that actually offer feedback, like customer feedback on a specific lender for startups or established businesses. What you want to do is, so those two, so you have the top 2 in our view. You have Trustpilot, and then you have Better Business Bureau. So those are the 2 ones that are really, really great, with the Trustpilot being a fantastic one. So when we talk about reviews, you want to systematically read reviews about a lender, especially the bad reviews. See, when you read reviews, you have to always start with the bad review, like the worst of the worst, the 1 stars, the 2 stars. Those are reviews you really want to pay attention to, so if the kind of problem a customer is raising, if those problems are deal breakers for you. Okay, because if you let's say if you read a bad review and a customer is talking about an issue that is like it's like effing important for you, and you can't just standing it. If you were to go with that lender, you never want to do business with that lender. Okay, so you want to start with the worst reviews, because it's not really worth it. It's not really worth your time, worth anything, worth your resources to read the good reviews, because if the reviews are really good, you'll soon find out anyway. Okay, so it's just better to devote your energy, to devote your resources to reading the bad reviews. And when we talk about reading the bad reviews, you not only want to read the reviews themselves, but you want to also pay attention to the words that the lender is using, if they're like when they're responding to those reviews, if at all, because some lenders will just ignore the reviews. Okay, but most like reputable lenders will always respond to bad reviews. This is how you find out that a lender is responsible enough, that they care about their reputation, they care about the customer, the borrower. And so those are important. So you also want to read the words they chose, like how they articulate their response. Are they like, what was the lender polite? Was the lender like very aggressive? Okay, and what was the issue itself, and how did they handle the issue? Because problems arise all the time. You have problems, I have problems. But the most important thing is, how do we address the problem? How do we find a solution? And not only like a short-term solution, but a long-term, consistent, and sustainable solution. Thank you so much for your attention. I really appreciate it. In today's conversation, I was giving you a few tips and tricks to compare startup business loans for bad credit, so you have a clear idea which funding arrangements you should choose for your new business. So I spoke to you about finding out their credit requirements. I spoke to you about researching other lender requirements too, seeing how high the interest rates can go, comparing and contrasting repayment terms and schedule, watching out for loan fees, okay, exploring the lender's customer service options, and reading customer reviews. Thank you so much. God bless you. I'll speak to you another time, but until then, remember, stay marvelous.